All right, awesome. Well, welcome to my library space here. I um, just got back from a long day of work um, and saw that Anfield was looking at raising some funds via private placement. And I've already been looking at Anfield as a company for a while. I've owned it for quite a while. Right now, it's at 14 cents or $7 million, which I made a video prior about what I think the intrinsic value is, and I'm not a professional by any means, but kind of using the assets they had, and they've written down a ton of assets. So when I think about this company, and I'm just trying to come to a conclusion on whether it's a good idea to put a huge concentration of your portfolio into one stock, even with, you know, it could totally change your life. I think in this case it could, but it could also be a really bummer situation where you lose 25 grand or whatever. Um, so I'm really trying to think through this company. And since the last time I talked about Q3, I kind of went through the numbers again. I made some gross mistakes of wording. I think one of the um, mil I basically said was 50, and it was bought in 2007 from Uranium One for 90 million. Okay, and then it was sold in I think like 2014 or 2013 or something to Black Range for 10 million, and then to Anfield for 5, and they got some other properties. Um, and then what did they do? So I previously put the Shootering mill at a value of 24 million, assuming that they can fix it back up for 30 million, and the cost to build another one's 120 million. So anywhere up in there, I'm just trying to be conservative. Um, they do have this resin agreement. It's supposed to be 500,000 pounds can be processed at the Uranium One Uruguay mill. I think that's what's called. So the problem with that is I wonder, and this is the first time I've pondered this, is if the 232 will have any, um, block on Uranium One based on ownership, or if it just has to be domestically produced. Because I guess that would be a really big risk um, in that situation. So, but then when you think of 232, there's also a huge upside in Anfield because um, Anfield has one of 3 licensed, permitted, and built, I guess, mills. The other one is Rio Tinto's Sweetwater Mill, which I have no idea if they could bring that on or not. I really should do research to that. I'm actually gonna, yeah, see when they could put that on. But basically, the only one that is operating right now is the White Mesa Mill um, with a vanadium circuit, and it maxes out at 8 million pounds. So if the quota supposedly for 232 is whatever 12 million pounds, there's going to have to be a solution via another mill or the ISR. I'm still confused on this, how the processing plants convert, how much they can convert. So if it is just via the mill that conventional has to move through, then 8 million would be enough because there's ISR. So another thing to learn. So what's another good thing here? Kind of just reiterate, trying to go over sort of the highlights from the Q3. They haven't come out with Q4 numbers yet. They've just been coming out with some tidbits, like they closed the deal with Cotter Corporation for the West Slope project and the Charlie project. So they basically sold 20% of the company at 1.3 million. So they're setting like a hard valuation stop. I mean, by 20% company buying it at $7 million or 6 something. So I think that's a really good sign as far as valuation. I'm sure they did their due diligence and they also didn't want to have this stuff, so maybe that's it. But Um, I think that could be a monster deal, depending on how it's set up, but definitely sets a base in my mind for value. So um, that helps. I mean, what else? I think the share structure, I talked about it last time. It's tight, but it has a lot of warrants. So like 44,000 with 24,000 warrants. I think they just added like 20 million to that. Sorry, 44 million, 24 million. And they added, I think it was between 13 and 20 million dollars or million shares for that Cotter situation. They purchased of Anfield. So the West Slope projects, technically, I don't know how much value they'd add. They could be like side projects for vanadium. I think that was the focus to kind of bring that together with the mill. Um, you know, I think that's a great idea to have two different locations. Kind of breaks up the risk. And what I think is really great about this company, and I talked with Corey on the phone um, maybe 2 months ago. No, June. It was June 3rd. Yeah, it was awesome. But kind of just listened to see what his motivation was, and I think he was really focused on pushing towards development, not just like a quick sale back, but towards development. And it seemed like he had a really good um, ability to push through towards an objective, right? So like 2015 or 2014 to buy the mill, that's something. To get the resin agreement, that's something. And then to get the new Chile ISR project that could go up in maybe a year or less, with some working around with the Uranium 1 facility, assuming they can do that. That's like, it's come to fruition almost. It's 2019. 232 goes off next month. So, I mean, I'm going off on this for a while, but the question becomes for me, why is he raising funds now? And when I look at the balance sheet and income statement and how much cash gets burnt, it's pretty much 2 million a year. You saw 2017 looked horrible because they wrote off a lot of these locations as useless, which I think is a hidden asset, 100%. So the mill is written off completely. It's not even on the balance sheet. So you see all these losses. And the one thing that, I don't know, it was frustrating, but I also somewhat agree with it. Actually, I do agree with it. But it was 4 million shares for options in September of 2018 to the um, management directors and consultants, I believe, too, which I'd love to know who these consultants are. But the strike price was 55 cents. So if you can get to 55 cents, then you've worked for it, in my mind, from 20. It's tripling your valuation. So for me, I work in a startup. If we did that, then we would be off to the races. It would be hard to go downhill much from there. So I think that's kind of the assumption, and that's fine. If they get to that critical velocity, then rock on. I mean, I love the one thing I think here is the snowball effect of he has these warrants pretty like separated like stairs, and just does a good job of like building the cash situation. So once the blast off comes, I think it'll pull a warrant at 40 cents, 55 cents. There's some all the way to $4, which I don't know if that's a joke for those people, or there's just a lot of belief in keeping the structure sound and keeping people motivated. But I do think it has room to run. It's a $7 million company right now. So that's basically what I'm thinking about the Anfield private placement. I'm not sure if it's still open or not. I would love to um, pursue it to the degree that the risk reward is substantial. Concentration is really the end risk. But one question I always ask myself if I am buying a stock, and I'm not sure who brought this up, but it's basically, would you run the company for the next 5 years? So if you had to buy a bit of this company, would you buy the whole thing and would you run it for 5 years? And in my mind, this is such a fun um, arena, maybe, but also the projects, he has a lot of projects, a lot of options. The pools where there's basically uranium and vanadium sitting there, basically like a quick cash boost. So if you need cash flow and you can get that mill up or partner with someone to have it up, that's like that starts something. Then you move up into the Charlie project, and then you come back down to conventional, depending on cost. And there's just so much. If you look at production, I mean, you could get to 1 million in production, and then the asset being written back on, I think you'd see like a lot of value come back to the balance sheet. So, if you can do 100 or 1 million a year, that's going to be a $150 million company. So who knows where it goes, but just thoughts to consider. If I talk to Corey, I'd ask him, a few things. I'd say, have you bought stock? How much do you own? And then do you expect to lose $2 million in 2019? Assuming there's no Charlie costs. And what would you spend that on? And I think after those two questions and a discussion, you pretty much know where you're at. I think kind of when you look at it in general, it's not a Warren Buffett situation at all. The earnings are just not there. So he also says don't invest in something that's not steady or you can understand the earnings over time. So this is definitely not a Buffett situation. There's that Toby Carlisle he wrote, The Acquirer's Multiple, and the thing that he hit home for me was the cyclicality of things. If the margins are high, there's competition there. If the margins are low, even negative, they're negative, not too many people are going to be jumping into this business. So it's going to take some cash to keep it alive until that changes. So I think that's playing in the favor of uranium right now. And yeah, the last quote, and I'll leave it on this, is the Howard Marks quote. I believe it's Howard Marks, where he talks about the only way to win in the markets basically is to be in a non-consensus with the crowd and also to be right. And that doesn't happen very often. So maybe I'm wrong on this one, and that'd be a bummer. But I think currently it's fairly valued to the point where I can't see it going down much more. And it seems like a good company in my mind. So, cheerio.